Okay, good morning, everyone. Sound check. Excellent. Good morning, everyone. It is Monday, July 6th, 2026. Welcome to the Pitbull Traders Morning Game Plan. I'm your host, Manny. The purpose of this show is simple: live futures trading, real-time technical analysis, and actionable trade setups. All with a focus on building real trading skills and the mindset designed to drive consistent profitability. Every morning we come in with the same goal: build out the structure before the open so that we're operating in alignment with the day's dominant forces. Not guessing, not chasing. All right, team, let's get into the charts. Let's build it out. First thing we're going to do is we start off on every Monday. We're going to start off with our higher time frame. Just take a quick glance at the weekly chart. There's really not much to discern. We've been trading in this balance, really bookended by this 7,400 low and 7,600 high, with the spike being below 7,400. This weekly buying tail that we have here. I think that anything we get below, if price starts to eat into that tail, I think that would be a sign of weakness. Let's watch for a look below and fail also at that level. 73.50 is really where we want to define that low. All right, let's take a look at the daily chart. All right, so on the daily chart, we can still see that 75.50 coming in, right? This is our 73.50 coming in here with this spike low where we spent, where it was really rejected, if you think about it, right? So price dipped below it on the, let's see, that was June 9th. And then June 10th, we closed at the low. It was again rejected. Buyers bought it up, and we closed right back above 73.50 on the 11th. All right, so let's keep that in mind. Let's make sure we have that framed out in our narrative for today. 73.50 low, and more importantly, heading into this week, there could be a scenario where we test it, or maybe we back test into that zone, as well as I think we have to monitor this 74.90 high. Remember that was the hourly trend change. Let's take a look at the 4-hour chart. Just want to get a clean chart here. Okay. So if we're looking at the 4-hour chart, let's remove this. Okay. Remember that 74.90 was what would signify to us that this downtrend, this hourly downtrend, flipped from a downtrend back to balance, right? So I wouldn't call it an uptrend yet. I would just call this a balance at highs, marked off by 73.50 at the low, 7,600 at the high. Okay. Here on the 4-hour chart, we could definitely use 74.90 as a downside reference, and that was Thursday's low came in at 74.79. So let's monitor that as well. Yeah, I think that that's kind of, but we really cannot call it until we below 50 and price demonstrates success there. Let's build out our most bullish scenario, the most bearish scenario, and what we would need to see for our beloved trap trade. All right, it is. All right, let's put this out here. Let's get that highlight off. All right, so the most bullish scenario I mean, it's pretty simple here, guys. We have yesterday's high. We also have the overnight high. Okay, so what we're going to be what I'm going to be looking for is an acceptance back above. So if we get above the overnight high, even this 74.6, let's see, 74.65. If we can get above there, right, get above the overnight high, and then starts to show some acceptance up, and we get a move higher. I think while we're trading above 74.65 to 74, so we get up there, if some acceptance, if it moves with the momentum, then it's onto the upside, and we can get 93.75. All right, let's talk about the bullish trap trade. For the bullish trap trade, pretty much the same scenario, right? Where we would come up above the overnight high, right? Chest 74.65, and then if we don't see any acceptance and overnight high starts to act as resistance, or maybe even 74.65, right? At that point, we can start looking at short scalps to the downside. We can start thinking about moves down to value area high at 74.95. All right, there's the opening bell. We'll talk about the most bearish in a minute. Okay, the most bearish scenario has us trading below value area low. If we get below value area low, if we get below the overnight low, I think at that point it would signify some serious weakness. Okay, if we can get below there, the overnight low, and any retracement that fails to hold, that fails to reclaim the overnight low, that fails to reclaim value area high, I think that the value area rule would come into play, right? So the value area rule states that when price trades outside of the prior day's value and then re-enters that value area, typically what you're going to see is price extend to the opposite end of value. So that would be a great setup just simply because of the range and how low value area low is. There's a 70-point spread between the two. So that would be great. That would be a great opportunity for a short trade. Let's take a look, make sure that if we get below the overnight low, we could probably even test as low as this. Maybe we come up and we test the settlement at 75.43. Maybe we test 75.49. Yeah, but I think that makes sense. That's the most bearish scenario. The bearish trap trade would be simply the opposite, right? Where we reclaim the overnight low, reclaim value area low, and the settlement start to show acceptance back within the overnight range, and then we're looking for a move higher. We're looking for value area high to be reclaimed, and then we want to trade within the direction of value, right? So we want to go with the developing value. Remember, value is the clue, right? We want to always trade in the direction of where the developing value might lie. All right, so that signals out our most bearish scenario. That also gives us an idea for the bearish trap trade. We have our most bullish scenario and our bullish trap trade. Let's see what the day brings. It's a new week. It's a fresh start, right? So I just want to be a little bit cautious here off the open. In terms of volatility, what we're seeing for this week, volatility is going, I think, as long as we're trading up in the upper portion of the hourly, if we're trading above 74.90, I think volatility is going to dampen. I don't think that will expand at all. The VIX is down at 1575. It's at a support zone right now. We'll see what transpires there. But let's keep a keen eye on the VIX, right? We want to make sure that we have an eye on that to see if anything materializes, if that gives us any clues as to any impending weakness the rest of the week. All right, so you can see we're back to testing that 75.65, but there are sellers up here, guys. There are sellers up here, team. Be cautious. All right, switching over to the trade chart. Trading into setup number 7. Don't like the high here though. It's going to be sit tight here. Good morning, Delphine. Good morning, Easy Money. Good morning, everyone. Hopefully you guys had a good weekend. We had a wicked rainstorm. Thanks, Easy Money. We had a wicked rainstorm last night. It was about 1 or 2 in the morning, and it was just it was incredible. Like it was just so loud. It shook the house, thunder rattling. It's pretty cool. All right, so the one thing we certainly want to be on alert up here for 2 things, right? We have a potential continuation long here. The price is coming up. It's testing. Now it's back testing 65s. So let's see what that materializes into. And remember the context from last week, right? Yes, last week we saw a lot of the first move was not the right move. So if we opened up with significant weakness, it ended up that the market went on a short covering rally, and vice versa. If we opened up with strength, that strength phased out and died out into the mid-morning afternoon session. So that's one thing we want to be mindful of heading into this week, is that, remember that the market likes to handle old business first. And typically what you're seeing off the open is the market handling the overnight inventory, right? So if the overnight inventory is long, or if the overnight inventory is short, you're going to typically see a correction of that inventory in the first morning session. That's why I like to wait for the initial balance to form out. Gives you a better idea, giving you a better clue as to how price may, as what the true directional intention of the day may be. Yep, I have that wrong. Now you can see we're already fading pretty hard here. Cautious right here. Maybe we get a it back tested right into 55, 75, 55, and it was showing some weakness down here. It was definitely showing some weakness, but I think that we're going to move higher here first in the early session. Let's watch it. You can see we traded down to 75, 55, bounced 5 or 6 points already. Only 18 contracts came off at the low. And what I was noticing in the pre-market was that there were a lot of tests lower where it wasn't noticeable in the candle prints, but in the order flow, although price wasn't moving that strongly, the sells seemed more weighted than the buys. So they would come in and they would sell 400, 500, 600 contracts within a 4 to 6 tick spread. All right, we're moving lower here, guys. We're coming off the setup number 7. So I'd like to see a break. I'd like to see a break below 54, right, for a short trade. Watching it closely here. It's kind of a big candle to sell, but again, really good order flow tells here. All right, watching it closely here as we bounce. Let's see if this is going to be a trap here where we got the strong sell off the open, and then price just traps some bears, selling into that momentum and get caught. Again, it's important that you have your plan handy because things can get volatile really quickly. Yep, you see, look, right back up to the upside, testing the 24-hour VWAP. Okay, so if that's 75, 70, this is an S3 day, so we can expect some choppiness. We can expect some back and forth two-way trade. However, remember where we are on the higher time frame, okay? Yeah, look, this thing might want to trap on both sides. Again, this is the time of these are the times where you're having your trade plan really saves you from a lot of unnecessary trades, because you can go back and reference your plan in this volatility and ask yourself, okay, so what was I thinking to do if price did A? What was my planned reaction to that A move? So I think what we have to add, I think what I'm trying to figure out here is, since we are above value, since we are above Thursday's value, before I place a trade today, I'm going to ask myself, is the market accepting these prices or is it rejecting it, right? So that goes back to the market profile. Just make sure that I want to trade in the direction of value, and I don't want to get trapped on a test of some value area I don't want to get trapped in a test outside of the prior day's value area that doesn't accept. Okay, so but thus far we back tested the open, we back tested the 24-hour volume point of control and VWAP, and there was a rejection there thus far. So that's hell. Okay, in terms of where we are to Thursday's value, we are trading, just in Thursday's value, so not really much to discern there. These wide, big candle prints are going to yield a move here. You would think. It seems pretty thick on the sell side. Nothing yet for me. Like I want to make sure that this settles out. One of the things that I want to be cautious about, that I'm always cautious about, is when I have a bias. And you see, we look right back to the upside again. All right, so we're pretty choppy here. got these big prints, and thus far price has gone nowhere. It hasn't breached the overnight high, and it hasn't been able to break this micro balance low at 75.55. So I mean, you know, people who are chasing the breakout got stopped out. People who are selling the dip got stopped out. Yeah, this is a pretty gnarly open here. Just be cautious. It looks like it wants to trade higher and retest into those 75.74, 75.71. Again, but when you have these types of open, so for me, this is a typical open where I want to sit on hands, right? So we get these really big, wide candle prints, right? We get the first 5-minute print has a 13-point range. That's telling you something. That tells me that there's a big battle going on, and that the market is not really it's not clear on direction, right? This is the opposite of an open drive. Sure, taking vitamin. All right, back to the upside. Let's see if they get to push higher. If you're scalping short, so one of the things that, you know, that trading with a bias, I mean, there are good things and bad things to it, right? Certain biases give you conviction. And a bias gives you a game plan. You stop reacting to every tick. You know what you're looking for. You're looking for a certain move, and a bias helps you stay patient, because instead of chasing every move, you wait for your setup to align with your thesis. And so a bias can also improve your risk to reward, in that if you are patient and you are willing to let conditions align for your entry. But a bias can also blind you, right? You can, if you're not cautious with it, the market doesn't really care about your thesis or your opinion. If the evidence changes, your bias should change along with it, and always have that kind of like that line of delineation. Now, mentally, it's hard. It's harder to release a bias, right? The difference there for me is trying a trade twice versus trying it 3 times, right? That's where the rubber meets the road in terms of the tactical engagement that I want to stay away from. I want to be able, the best traders can flip their trading or their execution with the market on the drop of a dime, despite their bias. So when you start looking for information about your opinion, when you start looking for evidence that confirms your bias, as opposed to being open to objective observation, you get in trouble. And there's a fine line between having conviction and refusing to admit the market has changed. I think that on that note, to that point, one of the best, at least for me, one of the best feelings in trading is when I quickly trade against what I thought was my bias, and I flip and I trade in the direction of what the market is telling me. And those are the days that feel the best, because you feel like you were really able to be one with the market. You objectively listen to the information, and despite your thesis, you were able to execute with the market and go with what was. I think that's one of the hallmarks of a good trader. All right, looks like we're going to test up into that 75.73 high. Again, stalking for that continuation above there, as well as being mindful of a look above and fail. But so far we opened with quite a move higher that was negated and moved lower. And now we're right back to the upside, but real fair. We opened up at 75.62. We traded as low as 75.52, and now we're just right back to 75.67. So really not much to discern from this open. Okay, back to the high. Again, I'm holding off on that setup. I want to see the conditions align in terms of order flow. I don't see that yet. chopping around. We're not really going nowhere. I mean, even for myself, I have a valid setup here, and I'm hesitant to take it simply because of the context. The context is everything, right? Anybody can have lines on the chart. But it's often, it's as we say often, it's like, so most people can have levels, right? But not everyone can trade them. And we have to be careful. We have to understand that context is king. Context is everything. Okay, further weakness here. So it looks like we're getting some another one of those choppy sells. Where people are going to chase it lower, and it's going to just, it's going to get ripped to the upside again. Back and forth until maybe this afternoon, where we finally get them when everyone's exhausted. And I don't mean to I don't want to be facetious about it. It's a pretty big, it's an important thing, but it just has not gone anywhere. Price is just simply right here in this range. You just want to be cautious. When price keeps rotating back and forth, the market is telling us something. There is no agreement on value yet. So if our job is to ride the coattails of the larger traders, the larger funds, people who are actually can move price around, then that is our job. There is nothing telling us here that they are in agreement one way or the other. Today's 20-point back and forth may feel boring, but balance often comes before imbalance. So remember that. The longer the market accepts a range, the more attention the more attention you pay to the eventual breakout. And this isn't an environment for home runs, right? If you're trading inside of this balance, take quicker profits, trade smaller size, stay disciplined, don't overtrade it, adjust to the market. Don't expect the market to adjust to you. And the battlefield is defined. Right now, the market has shown us 75.54 low versus a high about 75.74. Until one side wins, I'm treating those as my decision points. Nothing in the middle. Let's wait until those edges. If anything, the trade is, if you're bearish, you're trying to fade the edge. You're waiting for price to break above it, show some weakness, come back into the range, and then you try it there with your stop above, the local high. And if you're bullish, then you're doing the opposite. You're waiting for price to break below the lower range, 75.54. You're looking for it to stop in that direction. You're looking for it to reclaim that 54 low, get back into that range with acceptance, and then you're looking for an entry with your stop on the opposite side. Remember, patience is a position. Sometimes the best trade is no trade. And I know that sounds boring. I get it. But every tick doesn't deserve our capital. Wait for acceptance above the range or rejection from the extremes before becoming aggressive here. It certainly doesn't make for anything too exciting in one way or another. Yeah, thanks, Philly. It's just it's kind of frustrating, And here, here's another thing. Um, you know, on Mondays, typically. Hang on a second. Let's see what does that high look like? Hang on. We keep bumping up into that 75, 71. So now for me, so the way I'm outlining this for my personal execution is, so I have a setup at 75, 71, and what I'm looking for is, so what I'm asking myself is, will I fade it on the touch? Or am I going to wait for it to get it back above and do what I just mentioned, wait for it to come back in and then look for that move down, entry here with my stop up here somewhere? Because it's certainly not displaying any type of strength, right? We are trying to develop higher value, but relative to the overnight range, again, last night's range counts a little bit more simply because it was a Sunday night overnight session, and typically you have people coming in off the weekend, and they're there's new news, there's new information out, and they're looking to execute some type of strategy or position based on those occurrences. But so thus far here, unable to gain any traction above for the short side, right? So what am I looking for in terms of being able to short a break? Well, I think it's pretty simple, right? If we can get below this developing value area low, 75.57 to 75.55, right? So if we get this sharp break lower with strength and momentum, right, we're looking for this move down to the overnight low. Now, the reason why this becomes extremely risky is simply because of the nature of the open, right? How do we know that once it gets in this area that this is going to be the one that breaks? Well, we don't know. That's why you have different tactics for executing this type of trade, and that you can go in partial size, you can trade one, you can probe with an order, see how it acts. You can try the position with micros. And remember, a few things to remember on a Monday. You probably spent 2 days analyzing charts, reading the news, building scenarios. Don't feel obligated to trade just because you prepare. Preparation is not opportunity. The first hour often tells us more than the entire weekend of analysis can, right? Watch how the market accepts or rejects. Is it in balance? I mean, right now what we have is essentially a market that is going nowhere, right? Pretty much everyone's in agreement that the ES should be valued at 75.64, and what you're seeing is just an oscillation between 75.54, 75.74. Guys, that's 20 points range. That's doo-doo. That's nothing. If there's ever, ask yourself this: what would the day look like that I'm a pro trader? I've been doing this for 50 years. What does the day look like that I don't trade? Close your eyes and take a look at that. The market doesn't know that it's Monday. It doesn't know that we prepared all weekend. Just because our calendars say it, the market only knows buyers and sellers and liquidity. Trade what's happening, not what you expect to happen. And right now, there's not much going on. And remember that, hey, this is just one day, right? There's going to be just a full week, not abbreviated. Missing a mediocre Monday trade It's far better than forcing one when you think about it from a weekly perspective. At the end of the week, you're not going to grade your, you're not going to be grading your homework, your weekend homework. You're going to be grading your week's execution. So context, execution, that's everything. I wish it gave us more. Trust me, it's way more exciting when there's something good to trade. Like Friday, like Thursday was exciting. I mean, Thursday was pretty cool. Thursday we had some pretty good price action. I mean, even though it was just like us, pretty much a move lower in one direction. We did have some good opportunities. I recall mentioning on Thursday, when the market is trending, and I think we're going to see a volatility expansion pretty soon here. When the market is doing that, when the market is balancing like this, just wait for it, right? Don't dig yourself into a hole, because soon, the markets go from balance to imbalance. And what we want to do is be ready for those times. And those times those are the days where we want to pad our accounts. We want to be ready. We want to trade well. We want to be able to take advantage of every opportunity. So in anticipation of these kinds of days. Oh my God, this is so boring. It's 40 minutes and absolutely nothing has happened. We are trading. Look at your profile chart. We're trading in a 20-point range, 21 and a half point range. Total agreements on the price of the SPX right now. Believe it or not. Everyone in the world agrees. Everyone in the world agrees that ES is valued between 75.52 and 75.74. Boring AF. It did. Thank you for pointing that out. All right, well, there's some action. It looks like, yep, NQ has swept over its overnight high. Let's see what that does. Russell's weak. The VIX gapped up, so that's a tell. I mean, that's something to look at. See, the ticks are in range. Let's take a look at the weighted. Let's take a look at the WAD. The weighted AD telling us nothing. It's completely flat. Bars, equal size body on each side of the zero line. It's not telling us anything. Our internals are mixed with an IC 1.1 negative, 1-to-1 negative, NASDAQ 1.6-to-1 positive. All right. And then our sector list, and I changed these weightings. I don't know why they're still showing the 29%, but I'll have to take a look at that. In any case, 1, 2, 3, 4, 5, 6, 7, 8 are red versus Infotech and Energy green. And you know what? Technology has enough weighting to keep the ES up in terms of, say, if we're seeing sector rotation and technology is up because it's weighted at almost 33% of the SPX, that's 1/3. It does have enough weighting to keep the SPX up, even though the rest of the market may be weak. or at least keep it in this choppy range that we're seeing. Let's see, NQ's retesting that overnight high. Here's ES's test. I don't know. It's an S3 day. I mean, it could really just be chop. Maybe perhaps we end the day with a 35, 40 point range. That's the day I don't want to be a part of. That's the day I don't want to chase it. The more that this goes on, the more I feel like as soon as I enter it, I'm going to regret it. Another retest. We tested up as high as 75, 73 quarter, and now we are retracing. All right, another pullback from the 75, 71s. There's just no urgency here. If buyers were in complete control, they'd have already been pressing higher. If sellers were in control, we would have been lower. There's just lack of urgency, lack of information. I mean, that's the key thing, right? There's just lack of conviction. When price isn't moving, watch how long it stays at this level. Acceptance, acceptance is built with time, right? So we're accepting a bit higher. No, not even. We are, although we're above Thursday's value, we're still within range. This is where it really tests us, right? This is where the market really tests us and forces us to be disciplined. Okay, here we go. We're testing higher now. Let's see what we get. Let's see if they can get it to stick above 70. Oh, there's the test of the overnight high at 75.74. Finally. All right. Let's see if we can get some continuation, some extension higher. However, I'm still a little bit cautious. Every move here is going to be doubtful now, simply just because of this context. So let's see. So it's 10:22, right? So we're testing the high now. It's 10:22. Let's watch. We have 3 minutes left on the smallest time frame that we can reasonably use, which is a 5-minute. Let's give this 3 minutes, see where this bar closes. See how far it can extend higher, and then see where it closes relative to its open, and also relative to the overnight high. Gosh, I wish this gave me something better to talk about. Sheesh. $75, $77, $75 is our high. We are looking at 10:24. We're going to have 1 minute close on. It'd be interesting if this bar closes below the overnight low, the overnight high. Sorry, 75, 74 quarter. But we're right back up to testing the high. I think we're more inclined just to chop around and go maybe test a little bit higher, come back into range, possibly just form something like where we get that kind of like that B-shaped profile on the day. It just goes, something like this. And we opened, relative, we opened here, we tested up, but then we end up closing somewhere here or somewhere here. But really, there's just no difference in the day. And probably, so there's going to be an afternoon trade. On these types of days, there always is. Before I started streaming and putting my trading out there publicly, I used to really enjoy mornings like this. If the market was chopping around, I'd get up, grab another coffee, scan YouTube, and answer a few emails, maybe read some research. I didn't feel this pressure that I had to be glued to the screen. It would actually give me the excuse to take a few bars off, to look away. And you know what? Those were often some of my best trading days. And why? Because I wasn't trying to manufacture trades out of boredom. One of the biggest misconceptions in trading is that professionals are constantly clicking. They're not. They're constantly. They might be passively observing, but I doubt they're constantly clicking. The market doesn't pay you for screen time. It pays you for recognizing when conditions are in action, when conditions are actually favorable. It's not what we have right now. $75, $79, 15 contracts traded at the high. So what would get me, where's my next valid setup? If I could do a look above and fail here at the overnight high. Also have a fade up there. We're above 75, 71, but not to the point. Let me see. 75, 25, 75, 71. Yeah. Kind of like that 15 up there. You get like, I don't know, 70. Let's see if you can get a favorable delta. Nicely internals just flip. You can get 77s. I don't know. Kind of feels forcing it. $77, $70, $75, $79, 15 contracts traded. I think I might try these. I don't know. Maybe I probe with one contract. It's an hour since anything has materialized. Yeah, it did. It sure did. Yeah, there's some overlap. So, yeah, there's some overlap on that one. Let me know if you need. I'll text you. Let me see if I can find the day. Problem is this chart only has 360 days of data. So I think one of those came, yeah, one of them came. It was last May. Yeah. Yeah, this only has, all right, you know what? Let me just look. This one has 360 days data, 60-minute chart. We keep an eye on price action here. Okay. Okay. I'm short some future. Let me see. I'm short some futures here. If I can get a fill up to, like, I don't know, 75, 76. I'm wrong above 75, 78, 79. Yeah, look, let's see this one. It came from the AM high. Do you guys see that? I don't know if you guys are paying attention, but so I'm short some futures here. So look, you can see here on this S3H day, we did the overnight. We chopped around for 4 hours. Heads up. Heads up. This is why it pays to take notes, guys. Look, we chopped around on this day. If you guys are watching, we chopped around on this day for essentially for 4 hours before the break came. And look, we went from a high of 74.10. We ultimately traded a low. That was a 65-point break. It was on May 7th. That's the only example I have on this chart because it only goes back 360 days. That was a cycle day one high. That was its S3H cycle day one. All right, I hope you guys got something out of that. That's important. All right, I'm short some futures here. I'm looking to add, see if I can get a favorable fill on the ad. I got some at 76. See if we can get a back. Let me let this bar close, and then I'm looking for a back test of the overnight high that failed, 75, 74. And Q's back below its overnight high. I'm going to be really tactful with these. I have 75, 76 right now. Look at that buying wick though. Jeez. What time is it? 10:44. That's going to definitely close as a buying wick. I just took that off for a point loss. I'm going to just try to I want to try to get a better feel. Okay. Back above the overnight high. That negates the thesis. So I'm glad I had 75.76. I took it off for 1 point loss. I just closed it. This is more the area that I want right up here. All right, short again. Just probing up here, see if I can get something to stick. All right, short again. Let me just go look back and look at that high, that historical, that last time that happened. Yeah. This is the only chart reference I have because this chart only goes back 360 days. And I can only get it on a hourly time. Let me see if I can get can I get a 360 30 day? 30 minute? Edit. Yeah. No, I can only get it 30 minute. I can only get it 1 hour. Okay. All right. Well, so I can only get it on an hourly chart. Let me just scan this. I'm going to reference this at some point later today. Wait, let me take a screenshot of this. I have a feeling I'll come back to this chart today. I have a feeling I'll reference this again later today. Okay. Back above the overnight high, showing some acceptance. All right, I just took that one off for a 5 tick loss. I'm willing to stand aside. I'm just, like I said, I'm just going to be real tactful about this. I want to catch it on the way going down, close to my exit. I'm willing to take these like 4 and 6, 5 tick losses, just to see if I can capture something. And maybe I'm wrong on direction, right? Maybe I'm wrong, but I do have some precedent for it. And I do have an area. I do have a valid setup. And I'll just keep trying it. I mean, if I lose, 5 or 10 points, that's the cost of doing business. I'm short some more at 78, trying it again. Yep. Wrong again. I still have them on. What time is it? 10:54. This will be the last time I try it. Take out that high. I'm going to just revert. I'm just going to shit can that idea until later on today. I mean, if you've watched me long enough, you know you've seen me lose trades. That's never going away. Losing is part of trading. I think having a good thesis is what's important. Execution matters more than outcome. And so, good trades lose. Bad trades also win, conversely. So judge the process, not the P&L. I think I'm getting in closer to what we have as a pivot. I'm a little bit above my area by about 5 points. By about 74, 73, 75, 74 is like the top of that range. See what plays out. The important part is that you trade your plan. Yeah, it looks like I'm cooked on this one. I think you're right. What am I going to do? Did I talk myself into a bad trade? Thanks, pal. Appreciate it. Yeah, maybe. Maybe I just talked myself into a bad trade. I went and found the confirmation bias and everything. Yeah. Oh, boy. Yep. Hey, you never know, right? I mean, no, yeah, no, look at the volume. I'm done. I'm cooked here. They're just coming in pretty strong on 75 from 75.79 to 75.80 quarter. Yeah. Nope. I just closed it out. Yep. Yeah, it didn't work. All right. So I waited to 10:45 to start off with a loss. So be it. Yeah, I'm not going to do that again. That's for sure. Dang it. Yeah, it happens. Whatever. So how could I have better done this? I don't know. Like, let me see. Let me think about that. Maybe wait for high ticks. I don't know. I mean, look at the VIX now too. I'm just noticing. Look, we 12 contracts at the high. Maybe this is gonna take second time the charm. Oh gosh, no. I want to get in close to my exit because it's so dang risky, right? I'll try them here at 80, 75, 80. Yeah, give it another shot. Why not? For the twos of luck. Nah, I don't know. No, I haven't done it yet. Just feels wrong. Yeah, look, they're right back up to the top. Yeah, no, that's what I'm not doing it. I'm not doing it. Nope. Yeah, like so if in order to see like that failed auction type of look, I want to see like low double digit contracts traded at the high, and then I want to see price move away and not retest it. If like 10 contracts or 4 contracts or something like that, like sub 20 trades at a price, and then we move away, but we move away by 3 or 4 points and then just come right back and test it. That's just gonna go right back and test it. But if we move away, you see it just moves away 3 and 4 and then 5, and then it just enable. Yeah, it's a pretty good sign that you have a failed auction. But I think we're going to convert this. I think we're going to convert this. So I mean, I might have to switch hats here, right? And pivot to uh, the long idea. I hate being on the wrong side of things. Now we're just hanging out the high. I guess the continuation long was the way to go. So good job for you if you took it. Yep, I know you took it. So I'm starting off with that. I think I lost what? One on the first, two on the second, and like three on the on the third. Down about. I hate to look at my speed though. Yeah, I'm down about 6 points, 7 points, whatever. So I'm not going to try that again. I just don't want to keep banging my head against the wall and being stubborn about it. But I mean, basically, we're just grinding higher. Stay on the long side. Stay with longs. So twice I tried to short this market. Twice I got stopped out. And you know what? The question is, would I do it again? So, there was some precedent for it. The setup fit my plan. I was a little bit above my area, but, good process that still doesn't guarantee a good outcome. Judge, I guess I'm okay with that execution. I'm okay with the idea for it, right? It was certainly a planned trade. I definitely did some research in real time. You guys saw it. There was definitely a precedent for the trade, but it just, getting stopped out doesn't automatically mean the trade was wrong. It just means that I was not on time. Context, I think, matters, though. I think the context matters. The environment matters. Like trade. Today's a dull market. Momentum is not developing at all. Sometimes the market just simply, this tape can just chop here at the high for another 24 to 48 hours before it decisively breaks out. So, thus far I was wrong. Thus far my timing was wrong. My idea was certainly not validated. But again, the market doesn't owe me any move just because I figured out that's because I have a thesis. Today the setup, the precedent, I think I managed the risk pretty good on that. I definitely wasn't shorting any break. I shorted the first time on what I thought was going to be a look above the overnight high and fail, and then I shorted it again like at 78, and my stop was 81, so I was risking like 3 points, which on the ES is really low. But no participation, no validation of the idea. That's trading. You're going to try things, they're not going to work out, period. One of the trades that's hardest to avoid is the trade that's technically correct, but contextually wrong. Does that make sense? Whereas you have the support, you have the resistance, you enter at the level and everything lines up. It's just that the context of the day doesn't align with your thesis. And that's a big difference maker for me, in that knowing the context and trading with the context is, that in my opinion, matters more than trading a technical setup. You could have a high quality technical setup, but it could be a low quality version of context. And so, the setup exists, the precedent's there, but the environment was wrong. A dull market is no urgency. Sometimes a B plus or an A plus setup becomes a C trade because of the context. I think that one of the yeah, agreed, Greg. You got to put your hat on. Yep. And so part of being a really, I think a good trader is one that comes prepared. I think a great trader is the one that has a superior read on context, because when you really think about it, that trader knows when to size up. He knows when to limit his risk. He knows when to not short a dull market. So I don't regret getting stopped out. I mean, I don't. The one thing I do wish I wish I had a better read on context. I wish I would have understood that again, it could have sold off and I would have been a genius. But in the dull market, it's hard to take a fade. But if I had to do it again, I would do it just like that, right near my exit, right? Where you're wrong, you're risking what? Handful of points. I mean, typically a typical acceptable risk on the ES is going to have to be 6 to 8 points. I knew it might take more than once. I only tried it the first time. I tried it with one contract, the second time with one contract. So those were 2 point losses, 2 points of loss. And then the second time at 78, I tried it with 2 contracts. That's one, my sweet spot is 4 to 6 contracts. So definitely kept the risk under control. So when I reflect upon it, that's in my opinion, that's how I could take a loss and still feel good about it. That's a good loss. Yeah. The environment is going to determine whether your setup is going to work or not. I was talking about that on Thursday, right? How I said that the hairs on the back of my neck stand up when to think that I'm anticipating a bearish move, and the hairs on my back of my neck stand up for that, because we're going to get volatility expansion. And that's always a good thing, because that's when you get to pad your account. That's when trading mistakes are kind of forgiven. Here we go. Hang on. There's pretty good sell for me in here now. I mean, let's see. I hate to try that again. I also don't want to overthink it. Yeah, you see, look, it's wicking already. So 14 minutes, it's 11:14. That 5-minute bar is going to close on a buying wick. I'm not doing it. So I think trading context is way more important. I was pretty spot on with the morning. I stayed out of any trade until about 11:40. Took my shot. It didn't fail. Yeah, Delphi, maybe we get something after the European close. Typically with Vega, you're going to see a Vega expansion after 11 a.m. It's more 11:15. So we'll see. That's kind of when Vega resets, and Vega is a secondary Greek for options, just in case you don't know. I always want to review those trades, review the good ones and the bad ones, to know if I'm operating from I always want to act like I always want to trade and behave and conduct myself as a professional. And so I always like to review my stuff, review my work. I don't want to. I don't want to act like I don't want to trade as a rookie. I want to trade as a professional. And so I always tend to go back and review it and make sure that, because there were times where I review my trades and I'm like, what the hell was I doing? And so just going through that, I just walked through my mental review with you guys because it's so boring. There's nothing going on. And when I look at that hourly chart, let me just see what the hourly looks like. So this was the prior S3H cycle day 1. It was May 7th. Okay, May 7th. Let's see what today looks like. Yeah, look at that. I mean, it could still form. I'm gonna try some here. Just one contract. Just because I see the speed of what they're coming out. So starting at 75, 80, 50, down to 75, 78, 50, 194, 163, 440, 433, 66, 226. And that's pretty good selling. But look at where it just stopped. It just stopped at the overnight high. So no dice, no dice, no dice. Not yet. Nothing yet. Nothing yet. Again, I'd have to get in. If I'm going to try it, I want to get in like 3 to 4 points away from 83. So that's like a 79, 80 entry. So if I'm long, you know, I can try that all day long. You only need one. If you get the move, right? If we get the move, then it should pay for all those losses. And if you nail it, one of the things I failed to discuss is, if faithfully can get one contract in at 75, 80, 75, 79, 75, 78, right? And then we get the break. So the reason why I'm looking for that is, so say I get the break down below, back below the overnight low. Let me redraw this, right? So overnight high is here, right? If I have one contract in from around here somewhere, right? And I get the break on the inevitable retracement and I add another one, you know, my average is up here. And I like that. Like that's, you know, because I'm only going to ever add to a winner. And that's one of the reasons why I like to add in that fashion is like, hey, just get one on. And then if the move does materialize, if we do get, say, this, what I'm looking for, I have one on from around here, from above. Wait. This mouse is acting a little sticky. Right, so I'm looking for this move down lower. If I have one on from up here, from above resistance, looking for it to fade back, then I add one from in here. Right, my stop is going to be a local high. My average is going to be above the local high. You only need one to do that. Or relative to your position size, right? So 2, there was a time that I only there are times where I'll only trade 2s. Where I only start with 2. Typically, if the market's more volatile, we're getting better moves, I like to start with 2 because I want to be able to scale one quickly. So in order for this thesis to work out, and I haven't done anything, but say you got one that don't like the high yet. Another way to execute this is this, right? So wait for a test. Let me see. Let me just draw it. My mouth is so sticky right now. So instead, right, get in right. If that's your plan, you go again. This is all precedent on your plan. Hang on. Let me get one here. You can try to get one right near your exit, right where you're wrong, right? So if you get one like right near up here and you're willing to hold, this is probably really good with micros. right? So you have one from like right around here. If you get the break, price comes up, and you get in here, you're looking for a fade, then you have one from up here, then you can maybe add one on the break, right in here somewhere, right? Now your average is probably going to be somewhere around here, somewhere around here. Yeah, and then if it retraces like on a move like this, then you add like two or three. You add like two or three into this move here. You add like two or three, and then you're taking that top one off from up here. You're taking that one off. That's going to have all the juice in it, right? Then you take, say you're in 3 contracts. Then you take one off, you know, at this support, right? You fit your trade, your scaling one, right? And that's going to be the best one, because that's the first one in. But then you're just looking for maybe a little bit of more of an extension. But if it comes back in on you, right? If the price retraces from this support area, then you just take so you got 20 points, let's say on the first, then the second one you get 5, right? And then you move your stop at break even, or you keep the original risk on above the local high and see if it sticks. That's a way to, you know, try to manage the average and manage the scales to keep you in the trade. If you know, you have to have an idea and a thesis that you're trading. It does. So one of the things, what I'm hoping to say is it doesn't have to be linear. You can work around your position, trade around your position. But all we're getting here is higher prices. So I'm not trying it. I haven't done anything yet. In fact, I cannot try it until and that's what I'm going to stick to. I'm not going to try it again until we get to lunch high. Unless we get that, unless we get this, right, where price comes up and I can see that there's like, it comes up to the high and we get like 07 contracts traded at the high and then immediately comes back in. I'll stay flexible, but I'm mindful that I've already tried to trade this area and I didn't get the response. Coming into the 11:30 time frame, I wish there was more to do. I wish there was more to function today. But hey, you know what? So one of the great things in terms of one of my mentors used to have this saying, and his saying was, he used to say, "Rope follows expanded." So what that means is he would say that after the market expands, it tightens up like a rope, right? And rope is weaved pretty tightly. So the opposite is true as well. So after you get a tight coiled day, the next day you typically see a range expansion, you typically see volatility expansion. So maybe that's the case. And at the end of the week, we want to turn around and say, hey, we didn't waste all our bullets on Monday and spent all day Tuesday and Wednesday making back those losses. Just to put a week together, it took us 2 days. The good weeks are the ones that you go like Monday or Tuesday. You can just kind of coast into the rest of the weekend, the rest of the week. I like those. This is a retest of 70 of the continuation long setup here. I just realized that. Holy shit. Yep. There's a scalp long there. For sure. With room to target. There's a scalp long there with room to target. Dang it. I missed it. See if I can get a favorable fill. It's holding that notch at 75.8375. What's the higher time frame? Yeah, with room to target 75.93. Yesterday's high. Look at this bar. I can't believe I was selling that. That's dumb. Oh, God. All right. No worries. It didn't work out. Let's see if it holds at 75.83. Yeah, I know. Here's that test of 83.75. The bullets are going to ramp it right from there and fill it in later. So for a good little scalp here, a couple of points. It's now though. Oh, wrong chart. Come on, baby, extend higher. Don't stop now. Got good volume coming in. Good volume. Let's go. Come on. Boom, got it. Got the first one, +5 on the first one, +5 points on the first scalp from 83.75. Finally, I get to ring the register today. Let's looking for 5 on the second on the ad at 90.50. At 90, actually. Should be 90. Manual. And then I'm looking for 95 on the last. See if we can get it. And end the stream on a good note, on a positive note. $75.89 is our high with 10 contracts traded up there. Let's see if we can. I don't want to see price get too far away from there. See, we're in low ticks. See if the low ticks diverge with price. Managing this scalp really tight. Again, it's just a scalp. Took one off for 3 ticks. Let's tighten it up. It's coming back in on me. I don't want to just because of the poor location that I have, poor trade location I have here. All right, minus 2 ticks on the last. So this is exactly what I was talking about, FaZe, about the thing at the high, 75.89. We had 10 contracts traded, right? And then immediately we went back up there and tested it and then faded back away from it, right? So typically what you want to see there is you want to see that 75.89, say we fade to 75.85 and 75.84, but you want to get right back to it, right? You want to get right back testing it, 75.88, 75.88.50, right? 75.89. You want to see that. You don't want to get away too far away from it. Right now, we're right at that threshold right now where you want to see it turn and kind of get back there. So the reason why I exited, just because of, I'm just executing some risk management here, right? I got 5 points on the first, plus 2 ticks on the second, and then I minus 2 ticks on the last. I'm just managing that position just because of my poor trade location. Not looking to hit a home run here. I'm just looking to execute a scalpel based on the momentum. But now what I want to see is like if we keep failing to test that 89, right? If say we go up now here at 88, 87, and we just start fading back, that's going to start telling me something, right? And maybe I reverse back to my old thesis. Who knows? So pretty good. I feel pretty good about that, though, that I had this short thesis and I was able to stay mentally flexible enough to reverse and take the long. That's the type of execution and type of mindset that I want to have. I don't want to sit there arguing with the market. I want to be able to flip quickly and trade with what the market is telling me. I came in with a thesis. The market didn't validate it. I'm not going to stay here. I don't want to stay there and consistently fight it. My first opinion doesn't have to be my final opinion. Being wrong isn't really expensive. It's staying wrong that gets expensive. If you tried the short, it didn't work. The market told me something new. I listened, I flipped, I got long, scalp complete. It wasn't really the best trade of my career, but it was more about executing that mental flexibility. I think flexibility, mental flexibility is a trading edge. Most traders get emotionally attached to their analysis, emotionally attached to their thesis. And being a professional, you want to be direction agnostic. You want to be able to listen to the market and execute with what its intentions are. So yeah, I was pretty happy about that one. I had a bearish idea. The market disagreed. I changed my mind. That's not inconsistency. That's just being a professional. Five minutes on the clock here. I have to trade the market that's in front of me, not the one that I was dreaming about this weekend. Yeah, so you see here, phase. This is where you. This is sorry, Jay. This is where you would right. So this is where you would want to start watching it, right? Because now it's coming back up to test those 89 area, that close of that candle 75.80, right? So right now, if you're in the long trade, then you want to see it should start moving up, and think about the way these candle bodies, these candles should form out, right? If you're long, right, you want to start seeing these prints, right? You don't want to see the bodies print down here and the wicks at the top, right? You want to see these instead of these. So right now, if this formed lower, then you'd be wanting to exit. If you're flat and this is your idea is this, then this is where you're stalking the price action. And there's no, and so again, and just to that, Jay, there's no wrong, there's no, again, there's no right or wrong. There's, what does your trade plan say? What's your read in real time? And are you willing to take the risk? There's nothing to feel bad about. Being wrong is something we have to get comfortable with. Don't stay wrong. I could have stayed in those 85s. I didn't. But I like the mental flip, though. I like that I was able to mentally pivot there. All right, guys, that's going to wrap it up for me for today. Ran over a little bit on my time, but I was hoping to get something good to execute. Just didn't materialize. If you got anything out of this at all, please do us a favor, hit that like button, hit the subscribe button, and come back and check us out for tomorrow. Tomorrow we'll have, every day this week, we're going to have an additional, we're going to have different speakers lined up, so look out for that. Tomorrow we'll have someone different on. I'm done for the week, but we will have a good lineup for you coming through for the rest of the week from 9 to 11. So make sure you're tuning in for that, guys. Have a good one. Take care, and I'll see you tomorrow. I'll see you next week.